Let's welcome in our morning guest. Shrikant Shetty is now joining us. Aditya Agarwal is with us, as well as Samit Chavan. Okay, Shrikant will just join us. Aditya, let's start with you. First, a view on L&T.
Well, if we see L&T in capital goods sector, this is one of the best performing counter in last couple of trading sessions, and we are seeing fresh long positions getting built up in L&T on every decline. Means we saw last week that stock corrected a little bit, but again means we saw sharp pullback. So overall, we are still bullish on L&T from these levels. We may see some little bit of profit booking. Stock may come around 750 levels, but that is a good level where again one can go long in L&T, keeping a positional stop loss of 1690, 95 levels. On higher side, 1850 and 1900 is our target, which we're expecting that it can test in the next couple of trading weeks.
Right. Any view on BHEL?
Well, similarly, means if we see BHEL also, means BHEL saw some decent movement in last couple of months, but last month we saw some sharp correction. On lower side, 148, 150 was a support zone. From those levels, we saw some pullback. But for short-term perspective, now charts for BHEL is weak. We have seen some short position getting built up in BHEL in the last couple of trading sessions. So we're expecting that BHEL will continue to trade with negative biasness. And lower side, if it breaks 148 levels, then 140 to 134 will be the next target in BHEL. So I won't advise making long position in BHEL at current levels. In fact, one can go short, keeping a stop loss of 161. On lower side, first target is 148. Below that, 134 will be the next target.
Right. Good morning, Samit. What are your topics for the day?
Good morning. We have three buy recommendations. First one would be on Apollo Hospitals. In last couple of weeks' time, we have already witnessed a decent correction in the stock. But if you look at the overall daily chart, the stock has completed its correction, and it is now trading around its important retracement levels. On Friday, we witnessed the formation of long-legged doji pattern. So we believe that this can be a very good candidate in the near term, which can give a decent bounce back. So our immediate target would be around 1280. Stop loss can be placed around 1195. Our second buy call would be on Jindal Steel. Yesterday we saw decent profit booking in the stock, but if we look at the overall daily and weekly chart structure, it certainly looks quite strong. And 120, 119 seems to be a very strong support. So we expect the stock to resume its uptrend. Our immediate target would be around 128, so it can be bought with a stop loss of 117.9. And our third buy call would be on IGL. In last 2 days, we have witnessed a decent price move in the stock in the upward direction. Yesterday, we saw some subdued movement, but daily chart certainly looks good, and the stock is now trading around its intraday support level. So we expect the stock to climb higher. Our immediate target would be around 1077. And it can be bought with a stop loss of 1009.
All right, so three picks coming in from Samit. Let's now focus on another stock which will be under the lens because of its earnings, and that is Coal India. The earnings for Coal India for the fourth quarter were below estimates. We saw a 38% drop in its bottom line, coming in at 2,716 crores. Top line grew about 10%. EBITDA also much lower at 3,387 crore rupees. We got production volumes at 176.4 million tons. Sales volumes were far lower at 151.5 million tons. If you look at the other metrics, revenue per ton at 1,480 crore rupees were below estimates. EBITDA per ton at 272 rupees a ton, also below estimates. So whether it's a demonetization impact, whether it's the fact that coal uptake is low, Coal India either ways is a loser in the fourth quarter.
Right. One company that will be in focus, Anisha, will be Jubilant FoodWorks. The stock has been underperforming for a while now, but here are the numbers. That's a decline in the revenue which they have done, and of course the adjusted profit. The reported number is 6 crores, but there's some one-time adjustment, so I've adjusted that 11 crores over there, and that gives me a number of 18.9 crores in terms of adjusted PAT. It's a miss, and it's a big miss across all segments. EBITDA margins came in below 10%. I think this is the lowest that they've ever reported since their listing history. Same store sale growth, I checked back went back and checked for the last almost 15 quarters, and it's nowhere even close to minus 7.5. So that's again a number that's not good. One thing that I did not like in the numbers was the store opening. So whenever we have interviewed the management, spoken to them, they've always been very aggressive about opening stores. 100 stores, 125. Last 2 years run rate has been as much as 140 stores. But now in the con call, they said that there'll be a sharp cut in the increase. And at the same time, they've not reduced the capex. So they want to increase the sort of experience that one goes into that store. And you look at Jubilant FoodWorks, this is the pre-open price. It's a 10% sort of a decline that you're seeing for Jubilant FoodWorks now. So that's one stock in focus. The second stock that could be down quite sharply will be PFC. Let's just look at that as well. We get the pre-open prices of PFC as well. That's indicating a 5% decline. So there is a loss, and there is a big loss of 3,400 odd crores versus a profit of 1,259 crores. Sales numbers, or you can say the total income for NBFC company came at 5,513 crores versus 6,608. Greater than 10% of loan book turned to NPL in this Q4. The total impairment now stands at 36% of the loan book. Spreads were about 100 basis points during decline of 100 basis points during Q4. So it was not a good number, at least versus expectations. The numbers were not particularly that good. Srikanth, first of you on Jubilant FoodWorks. Motilal as a house has been tracking Jubilant FoodWorks for a while. Right. But just when you think that these companies cannot go wrong, such sort of numbers come.
Right, true. I mean, we always like the franchise, and probably we still continue to like that. But in terms of numbers, I think it has been disappointing. It has been disappointing for the last few quarters now, and this was clearly even a lot more than what one would have anticipated. So we've seen probably the first time where we're seeing sales degrowth coming through on a year-on-year sales degrowth coming through for a franchise like this. Clearly, there is pressure, and one would need to see how things play out here. So we have downgraded the rating for the stock. We have had a neutral rating for some time now, and now we're downgraded to sell with the target about closer to 700 kind of levels.
Right, but again, it's been a favorite stock. As you say, you still like the franchise. Something what happened with large cap pharma. Just don't try to chase them when they are falling.
No, see, valuations have been rich for these companies. Let's understand it. As I said, consumer names. There are not many, many names to like in this kind of category, in the food consumption kind of category. If you look at, today also they have 75% market share. So these are companies which will remain in the radar. But in terms of performance, I don't think the performances will lead to any or stock price improvement. So in terms of stock price performance, I think there was valuation being rich. There will be downsides, and there will be a fair amount of consolidation need to happen till we start seeing some improvement in their base business. What's happening? The management is following now taking up various strategies in terms of closing down stores which are not profitable. They probably are going to go slow on the number of stores which they were earlier planning. So they are taking various steps. So need to see how they manage to do their profitability now going ahead.
Right. What are your top picks?
In terms of trading, I think we will still continue to be with the index-based stocks. I think they've been little better, as we have said. Large caps have more value compared to mid caps. So stick to large caps. Probably likes of ICICI Bank, ITC from a positional perspective. In the mid cap names, I will still like the housing finance names. I think we'll go there. Repco Home was one of the companies which also reported recent numbers, and they look reasonably good. So from a longer term perspective, I think within the housing finance name, Repco Home Finance looks good.
Right. BPCL is another company that declared numbers, and that will be in focus today as well. Numbers came out late night yesterday. 1,800 crores plus in terms of profit. The total income came in at 66,000 crores. Remember, IOC, HPCL both have reported numbers. They have been both different in terms of direction. EBITDA 2,212 crores. EBITDA margins came in at 3.3%. GRMs were close to about $6 a barrel, which is a decent number. Of course, there are some one-offs over there, but even if you adjust for that, the numbers are not particularly very bad. They've given or the board has approved a bonus in the ratio of 1:2. Not far back, they had already approved a bonus, so another bonus coming in shareholders of BPCL way. But names like HPCL have also done it earlier. They've given better dividends. These companies in the last 1 year, of course, have been very big outperformers. So Anisha, BPCL will also be in focus.
Right. Of course, the pharmaceutical space has been one which has been extremely weak. Aurobindo Pharma came out with its fourth quarter earnings. Let's take you through them. Sales have come in lower at 3,582 crore rupees degrowth of 2.5%, and profits have also fallen about 5%. So you have a lot of bad news associated with the pharmaceutical space when it comes to the US FDA, and now the earnings have also started to disappoint. EBITDA was far lower at 661 crore rupees. EBITDA margin shrank to 18.5% versus 22%. This basically because the sales were lower, we saw the EBITDA much lower. Their debt has increased to about $439 million on a sequential basis, so that's also something to watch out for. Aurobindo has been very weak, closer to 500 rupees a share at this point of time. This is the pre-open performance. Let's see what happens once the markets open. It will be in focus. Let's also take a look at Power Grid that came out with its fourth quarter earnings largely in line with what was estimated. 22% growth in the bottom line, 17% growth in the top line. Steady quarter for Power Grid. EBITDA was up 11% at 5,618 crore rupees. EBITDA margins at 83.7% versus 88%. Wanted to come to you, Aditya, on Power Grid. It came out with a strong quarter, and T&D expansion continues. Where do you see the stock headed?
Well, if we see in the whole power sector, Power Grid is one of the most strong counter. But on higher side now we see that 214, 215 is a very strong resistance zone, and means its stock is continuously seeing some profit booking pressure on those levels. So once it breaks 214, 215 levels, then we are expecting fresh buying in the counter, which can take stock towards 235, 240. So we are bullish on counter. If there's any correction also, if stock comes in the range of 206, 204, that will be a good time where one can go long with a positional stop loss of 194. On higher side, we are expecting that above 214, stock has the potential to test 235, 240 in short run.
All right, so that's the view coming in on Power Grid. Shrikant, what do you make of the earnings from BHEL and L&T? How would you approach both these counters?
See, BHEL has per se been disappointing, and we don't see too much of improvement going ahead as well in terms of given the kind of order book which it has a bit of a stale order book. So we don't see too much of upsides in BHEL. In fact, we have a sell rating there. We see potential downside risk in BHEL from a medium-term perspective. L&T is something which we like. We think it's the best play if you want to play the capex cycle. It still remains the best play. Though in terms of performance, we think it was a slight miss in terms of our EBITDA estimates or in terms of our profit estimates. Even in terms of order flow guidance, we think it was slightly lower than what we would have liked to see. But broadly, we still continue to like L&T, given that it is best placed to play. As I said, if you want to play the capex cycle, L&T is best placed there.
Right. In terms of guidance, they've given a 12% number. Now, the street consensus came to 15%, but I look at the consensus sales numbers for most of the top broking houses, including yours. It's not more than 10-11%. So one cannot say that it's a disappointment in terms of guidance.
That's why I said, that's why probably the market may not react much, but in terms of expectation, probably we were expecting slightly higher. So consensus, yes, in the street consensus, probably in terms of sales growth, it still remains about 12%. It's not moved up to 15-16% as you rightly said. So because we have had slower kind of sales growth, slower execution. But the expectation is that once the order flow starts improving, the potential in FY19 and FY20 tends to be at least improving. So that's where the order flow guidance tends to be a slightly important number to look at.
Right, markets have just opened and various stocks are reacting to numbers. Aurobindo Pharma, con call is going on. It's flat. It's down about 4 rupees right now. Not much change, 6 rupees down now. SBI 280 to 83, 1 to 2 rupees lower. ONGC is down about 1.3, 1.4%, 173, 174 for ONGC. Vedanta 2 rupees down. BPCL down 2%, reacting to numbers. Reliance flat with the negative bias. ICICI Bank no change. Remember, we are approaching the 31st of March. That's when you have that MSCI buying for ICICI. So it will tend to react to that. IOC 420 about 1 to 2 rupees higher. Asian Paints 1.1 rupee higher. HDFC Limited on your screen. Axis Bank down 2 rupees. Ambuja Cement about 50 paisa lower. HDFC Bank down close to 3 rupees or so. GAIL is up about 2 rupees, 403. Infosys down 4 rupees. Hero MotoCorp 13 to 14 rupees higher, 3,680. And Z Entertainment is down 1 rupee. Cipla 1 rupee lower, 504. Wipro down about 2 to 3 rupees. ACC down about 8 rupees. That's the sort of decline that you've seen. And and IndusInd Bank is 2 rupees down. Let's look at some results reaction and what's happening with some of these names. So let's start with Larsen. It should be on the positive side, about 2.5% in terms of gains. 1825 for Larsen, about 2% higher. 1825.26 for Larsen. Let's look at BHEL. There was a disappointment. 6% down. 143, 144 for BHEL. So that's about 9 rupees decline for this stock that's reacting to numbers. Let's look at Jubilant FoodWorks. Straight away 10% down. That's the sort of cut that you've seen on Jubilant FoodWorks. It's a company which has been disappointing for a while now, but I think yesterday with the sort of commentary that the management has given, it's probably not something that the street has liked. That's about 836 now. Coal India is down close to about 2% 260 odd rupees for Coal India. So that's something which is going down based on numbers. Let's look at Aurobindo Pharma. No change, 2 rupees here and there. Numbers were slight bit of miss, but I think looking at some of the other companies, I think the street had already expected those numbers. Let's look at BPCL as well, down about 2%, 737. That's reacting to numbers. Samit, Jubilant FoodWorks is down close to 11%. What will be the next level to watch out for?
See, clearly, after a consolidation of nearly 1.5 months, yesterday we saw a decisive breakdown from its important support of 960, and it was along with decent rise in volume. So, we expect continuation of this downward movement. Next support to watch out for would be around 820, 815. So, at least we expect continuation of this movement at least towards 820, 850.
Right. Shrikant, you spoke about Jubilant FoodWorks earlier, but at what price would it be attractive? Or if it's difficult to predict the E or P, you cannot say at what P would it bottom out?
It's a bit difficult. I mean, it would not be right to look at a PE ratio because we are talking about earnings where earnings itself is going to be a questionable one in the near term. So I don't think PE will be right to look at. But when we start seeing some signs of business stabilization and probably improvement in the same-store sales growth, then I think things will bottom out. In terms of prices, we are looking at a closer to 700 kind of prices in the current juncture. Yeah.
Right, about 700 rupees. But again, at that point of time, you're saying that the sort of aggression, the sort of same-store sales growth that is there, all will be need to relook once it's happened.
Definitely.
Right, and when such transition happens, Shrikant, PE derating, what we've seen for pharma, it's very easy, can happen for some of these consumer names also?
Yeah, some of the consumer names like these, because the expectations were very high. If you look at valuations of Jubilant Foods, you used to get valuations of anything between 50 to 80 times kind of earnings valuations. Even at these levels where, people are discounting, we are discounting a fair amount of, negativity. Even then, it will probably, even at 700 levels, which I'm talking about, it will still trade at about 38, 40 times forward earnings. So it will not be cheap even at that levels.
Right. Let's also look at some of the other names. So Power Finance is now going down. It's down about 5%. Let's look at REC as well. That's also down 3%. REC, by the way, report numbers today. Shrikant, these NBFCs, what would be your call? Power Finance, REC. Power Finance declared numbers. REC declares numbers today.
I think the way Power Finance numbers have come through, biggest fears, because some of these companies like REC, PFC have not, disclosed probably the NPAs or the potential NPAs which are there. They've been growing very fast. They've been reporting strong growth, but the extent of probably the NPAs or at least the doubtful loans which are there within that, I think has not been classified properly or has not been reported properly to some extent. And I think the first one which we've got through from PFC indicates of that. So one needs to be cautious because the entire power sector has been a stress sector for the banks, but for somehow these NBFCs are not reported anything of that kind. So one needs to be a bit cautious there.
Right, and these companies have run up a lot. So, expectations are that earnings will improve.
Yeah, the expectations remain that earnings will improve. They continue to pay the dividends which they have been paying. It's been a very high dividend yield kind of play. So a lot of safety element was being thought out in this in both these cases. So now that if this the numbers kind of disappoint in the manner in which I think we have seen in PFC where there's been a big provisioning coming through. So clearly that will be questionable, so one needs to be cautious there.
Right. Aditya, what will be your call on REC PFC?
Well, if we See, RDC and PFC, both the stocks means after a fabulous run are now under bear grip. We are expecting that both these stocks will continue to see correction. We are seeing some fresh short position getting built up in both these counters. So we are expecting the RDC can test 175 level. So means at current levels also any pullback can be used to make short positions in RDC with a positional stop loss of 196. Similarly, we see PFC also. PFC has fallen much compared to RDC. Now PFC don't have much space on downside, 117, 120, and that will be a good support zone for PFC. So again, if PFC corrects for 7-8 rupees, I would be a buyer in PFC. But in RDC, yes, still some more space is there on downside. So I would short sell RDC on any pullback.
All right, let's pull up BPCL for you. It's down 3%. It came out with its earnings and it's the biggest loser on the Nifty. And Aurobindo Pharma, post its disappointing earnings, is actually trading in the green. I guess there is something happening in the con call which is providing the markets with some hope for this counter. What would you do with BPCL, Shrikant? 3% lower.
I think to some extent it's because the run-up which we have seen ahead of it. I think post HPCL numbers we've seen a bit of a run-up in BPCL also. So that's what I think we are seeing a reaction coming through post the numbers now. So the refining margins were not as high as reported by HPCL. If you look at it, was about $8, and here it's been about $6. So I think there's some amount of pricing in of that disappointment coming through.
All right. In fact, on high volumes, we are seeing a lot of losers today. BHAL also reacting to its earnings is down, I think, a good 6%, a deep cut coming in for BHAL. Hindustan Construction is also down 3%, GMR down 3.5%, HTIL down 2%, Allahabad Bank down 2%. On high volumes, we're seeing a lot of profit taking happening. Samit, Tech Mahindra had a big breakdown a day earlier. Today it is up about 2%. What would you do with Tech Mahindra?
See, Anisha, 400, 415 we are seeing as a very strong support. It's a multi-year support zone. And yesterday we saw a decisive breakdown below this with a breakaway gap. So that indicates that the important support has now been broken with a gap. So in the near term, any bounce towards 400, 410 is likely to get sold into. So we would advise traders to stay away from the stock. Any bounce back, as I said, towards 400, 410 is an opportunity to exit your existing long positions. And we would expect the stock to head much lower from current level 360, 355. These are the next levels to watch out for.
All right, that's a view coming in on Tech Mahindra. It is weak and perhaps one that you wouldn't look to rush into. What about the metal space, Aditya? We have seen strong moves coming in some of the steel counters. Tata Steel had moved up very well and now it just seems to be consolidating. What would you do with some of the steel counters like Tata Steel and JSPL? JSPL was a recommendation also. What would you do with
bearish on metal space. Overall metal space still look bullish. Yes, we can see some profit booking as stock, as most of these stocks are very well, almost 10 to 15% in the last couple of trading sessions. So some profit booking cannot be ruled out. But again, if there is any correction of 3 to 4%, it should be used. It can be used to make long positions. If Tata Steel comes in the range of 490 or 485, it will be a good level where one can initiate long positions with a stop loss of 474. On higher side, we are expecting that Tata Steel can test 530 to 545 in short term. Similarly, we see Jindal Steel also. Jindal Steel, we can see some profit booking. Stock may come in the range of 110, 112 level. But like again, that range will be a good level to initiate fresh longs with a stop loss of 104. On higher side, 130, 135 is the target which we are expecting in Jindal Steel.
All right, so that's the view coming in on the metal counters. Samit, I want to come to you on a counter, PC Jewelers. Yesterday it saw a big blowout move and the markets weren't really going anywhere. It saw a big jump in volumes as well. On the charts, what do you see for this counter?
I'm sorry, can you repeat the stock name?
It is PC Jewelers.
Yeah, PC Jeweler, if you talk about the overall levels, after a consolidation of nearly a couple of months, yesterday we saw a decisive breakout from a hurdle of 460, 465 on a closing basis. If you look at the overall volume activity, yesterday's volumes were 4 to 5 times higher than its average daily volume. So clearly bias remains positive and the stock is now trading around its all-time highs. We would expect some consolidation, but within this consolidation, if this stock comes around 490, 488, that would be a very good buying opportunity. And slowly and steadily, we expect the stock to move higher. 540, 550, these are the next levels to watch out for in the upward direction. So one should trade with a positive bias and use any minor dip within this consolidation to accumulate this particular stock.
Shrikant, what's your call on the pharma pack? Overall pharma pack, Aurobindo of course is up 6% today after numbers, but what's your call on the pharma pack?
See, overall, we've been more constructive in pharma in that sense, but I think the results have been clearly disappointing. There's one sector which is definitely disappointed in this quarterly numbers, right from Lupin, Cipla, Reddy's, Sun. I think all have disappointed, but barring probably Aurobindo, which seems to be more or less in line in numbers. But I think the kind of the pressures which we are seeing in the US business for most of these large companies, FY18 looks a difficult year for most of the companies, and that's what seems to be the guidance which is coming from the management of most of the companies. So I think the near-term performance is going to be sketchy. Don't think there's need for any significant exposure in pharma in the near term, unless you have a 2-3 year kind of view where you're starting to see some recovery post FY18 with some of these problems plant related, or even the we have a bit more clarity on the US business. So it has to be more longer term view from an investment perspective. I don't see too much of upsides in the near term.
Right. Also, can you just tell us that when such disappointments happen with such high PE companies, this is how markets punishes the stock? That's what pharma is showing you?
Clearly, see, from a sector where you are anticipating growth a year back, today we are looking at a scenario where we are looking at potential degrowth probably for a year, at least from a 1 year perspective. So clearly there will be big derating, and to a large extent the derating has already happened. But I don't see any triggers for a re-rating happening again. So that's a problem here. So maybe the downsides are limited from a valuation point of view, because some of these companies have corrected big time. Most of the, if you look at whether Lupin or Sun, they all are down probably more than 50% from their highs. So to that extent, the PE derating has already happened. But along with that, we have also seen earnings degrowth coming through. So in that sense, there could be some more downsides in the near term, or at least more of a time-bound correction which could continue in these stocks for some more time.
Right, and again, the same theory what we spoke about Jubilant. Don't try to chase them when earnings predictability is very difficult.
Clearly, see, if you're looking at near-term gains, I don't think there is unlikely to be much gains, because near-term predictability is not there. So if you're looking at 2-3 quarters, I don't think there's too much to play in within the pharma pack, especially among the larger ones. But yeah, if you're more of an investment kind of where you are willing to take a 2-3 year kind of perspective, maybe then it's a time to probably look at a nibble into some of these stocks.
Right, Aditya, if we just look at the pharma pack, what sort of sense you get in terms of the overall pharma pack? Is the shorting activity very, very high, or you get a sense that it's broadly got to do with what's happening in some of the large cap names where people are unwinding positions rather than fresh shorting?
Well, I think it is a mix of both. Means we have seen fresh short position getting built up in last couple of series, but now in this series we are seeing some short unwinding pressure. Yesterday means most of the pharma stock bounced back from the lower levels, and today also we are seeing some selected follow-up buying in some of the selected counters. So from these levels, I won't go short in pharma space. Yes, it means this is not a time to go for aggressive longs also. But yes, if someone is looking for trading bets for 4 to 5% upside, one can go long in selected pharma counters. Stock like Divi's Lab, which saw some good support at 530, 535 levels and saw some decent pullback in yesterday's trade. In Divi's Lab, we are expecting the stock can test 610, 615 levels, so one can go long in Divi's Lab. Similarly, we see Aurobindo Pharma also. Stock has already rallied by 5% in today's session, so not much upside is now expected in the coming session. But yes, till 560, Aurobindo Pharma can also see a pullback. So we are selected buyers for trading purpose in pharma space, but not very aggressive longs for positional purpose.
Right, but pharma will continue to be a very selective game from here on?
Well, yes, pharma will be a selective game, means we have to pick and choose the counters. Some of these stocks are still performing. Stock like Lotus Lab and Cash Market, we have seen that this stock has not corrected, and we are seeing some buying in this counter and decline is being used to make long position. So it will be a very selective play, and we will not see a broad-based pharma sector performing as such now.
Right. Shrikant, just a word on M&M and Hindalco. Both of these companies declared numbers today. Can you just tell us your view on these two names?
See, we remain positive on both of them from a positional perspective. M&M, partly, if you look at it, it's been a big underperform within the auto space. So it's not been a great performer. But we're starting to see revival in the rural space. I think in the rural space, if things starts playing out, I think M&M can be a beneficiary there. Plus, on the SsangYong front, I think we're starting to see some of the businesses starts firing. So I think things could be positive there. Hindalco has been our preferred pick in the metal space broadly. So we remain positive there. I think it's one of the in the metal space, one of the few stocks which we like. That's apart from in the non-ferrous names, that's the preferred one.
Right, Shrikant, thank you so much for taking out time for us. Samit, Aditya, always good to get a perspective from you. But before we go, Shrikant, let's start with you in disclosures.
No personal positions, but yeah, our clients may be having positions in any of the stocks which we've discussed.
Samit, for you.
I don't have any personal holdings in the discussed stocks, but our clients might be having positions.
Aditya, finally for you as well.
Well, the stocks which we have discussed, we have advised to some of the clients also, so they may be holding some position. And personally also, I may be holding position in some of the stocks discussed.
Thank you so much, gentlemen, for taking out time for us.